Hi folks, Lee Gettess here with the Market Sense for the week of February 5th, 2013. The charts in this presentation come from the Trade Navigator software from Gettess. And the first chart we'll look at is a weekly bond market, and you can see bonds have been turning down for a couple of months here, well, 3 months really, and this is looking like it's breaking out of about an 8-month long sideways pattern. That being the case, this could be nasty. We could be down here off the screen and really breaking substantially lower. Now, let me remind you, we're dealing with a market that the Fed is buying. $45 billion a month, the last I knew. So hard to tell just how much difference that'll make in the price action, but technically this looks like a pretty serious breakdown could be underway here. Now, so far this week, we're holding above the support. The support here is, what is that? It's about 142 area. If they break that, I think the lower Keltner channel at 141.08 is roughly the target. The resistance, if they're going to trend down, is 143.24, and they have held sort of in that vicinity. They've been a little higher, but not much. If they can get going a little more, we could go to 144.20, or possibly even up to the upper moving average here at 145.24. Even a rally of that magnitude would still be no big deal because it would be below the previous swing low here and still look like they could roll over. So obviously our indicators, the momentum indicator says they've been beaten down quite a bit here, so they could at least stall if not bounce a little bit. But this has the potential to just literally fall out of bed and look just coyote ugly here. So worth keeping an eye on that. Now stocks, of course, look just as good as bonds look bad, although they're getting a little scary. There's not a lot of volatility here. They seem to be perhaps running out of gas a little bit. However, the next upside target is about 15.15, and that certainly looks reasonable. The support to hold, if the trend is going to continue up, was 14.95, and they broke a little lower than that, but they did not quite reach the 14.88, which is the green line here. And heck, they could go down to 14.75, and they're going to at some point break down to the mid-Keltner channel. That's at 14.30 this week, but it's obviously moving up fairly regularly. At some point, they'll break down to that. Whether they hold it or not will tell us exactly how strong the trend is once they get that far. But I'm getting way ahead of myself. Right now, they look pretty good. We want to see if they can hold 15.15. My guess is that they're going to work higher in the very short term here, but we could be due for a fairly substantial reaction here. Normal reaction would at least see them go back to these old highs here, which are just above 14.50. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in to see what we're thinking about.